Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, May 9th, 2024. It's 1:23 p.m. Eastern Time as I'm starting the video. Here's what we're going to do. I'll do a very brief update on the equity markets and then wanted to highlight some trading ideas, long side trade ideas in a sector that is starting to look attractive. That's going to be the agricultural input stocks. Those are your fertilizers and the likes. I'll start out here with QQQ. There's really not much to add. Its market the last couple of days is like watching paint dry. We're still in. We had the breakdown. This is that active trader swing trade or active trader swing trade. Yeah, I put out, and I can't recall the last time I've seen one that's takes so long to play out. By play out, either meaning to hit at least the first target or to hit a reasonable stop based on the a reasonable favorable RR to the final and preferred target. So we're right there. We broke down. I gave you that update yesterday. This little trading range here. There was a opening market imbalance, took us there slightly, briefly, just below that, but then snapped right back up, and we remain. I mean, I should use a box tool. This is it. So that's it. We're in the range. We're at the top of the range, which is, of course, still also the downtrend line off the highs. That's also was part of the case. Short into resistance here. So that's it. It's the story of the Nasdaq. And while I'm here, I added these yellow lines just to kind of illustrate what's going on lately. The market's not going down much. We had to 8% swing down from that post-Fed high. Short entry hit T2, gained the bounce. So that was a net. Again, depending on how far I didn't milk the whole thing up personally, so I got a couple percentage points. That's at least a 10% if you go down to T2 and gain a bounce, or more if you took it all the way up to this level. So nothing's changed, and there's really not much to update. But I just want to talk about really the highs and the market leaders. So that was on. You can see my crosshairs, the top pop-up box to the left, March 21st. That's so far when the market peaked. And of the market leading stocks, you have a few here I marked. Microsoft, also March 21st, same day as the Nasdaq. Apple, have to roll all the way back here to last year, 2023, in December. That's when it peaked, and it pretty much had a double top. It made almost an identical high to the high all the way back in July. So this is former crowd favorite, former largest of the Mag 7. And that one, even NVIDIA, the king of AI, the king of this the whole AI bubble hype, peaked back on March 8th. Alphabet, it made a new high. There's only two that recently made new highs, Alphabet and Amazon. And none of those, or at least not, I should say Alphabet has not built or build on its gains. It has been unable to build on the gains, is what I'm trying to say. And Amazon, an ever so slightly high today above the previous one there. So you have, and of course, Meta peaked back on all the way back on April 8th. And Alphabet, I already covered Alphabet. That one hasn't been able to build on the post-earnings pop. Broadcom peaked back in the beginning of March. That's March 4th. In Tesla, we have to go so far back, it's not even on here. I have to go out to a daily chart because Tesla peaked back in 2021. Not 2023, not 2022, 2021. So that's it. That's kind of just the update. So, and the story is, the market, again, when you look at it from a bigger perspective, it hasn't gone down much, but it also hasn't gone and made new highs after. And that's what I wanted to point out. We're behind peak earnings. The only one left is NVIDIA, and they've been weak. I'll throw out NVIDIA. I shorted it the other day, and I haven't put it out as an official trade idea. It's just based on, and I'm only up 2%, so not even much. So shorted just this little wedge break here. First time I've traded this stock in a while since around earnings back here. Or wherever that last earnings trade was. But that's it. So what I've noticed, we had this divergent high here on the 60-minute chart, a break, somewhat impulsive, and again, we're just we're not going down much, but this one is sucking wind lately. And again, this is NVIDIA, and it peaked all the way back here. Again, we're not far off the highs. If it takes out this trend line, there's going to be more to come. But again, it'll most likely go into somewhat of a holding period, as stocks usually do leading up to earnings. And maybe there'll be some trading ops around this earnings report like there was in the last one. Okay, I'm not going to do a deep dive into the grains because I've covered those very extensively lately, including this last and most recent hit of this key level here that I've been harping on for many months now, about just over the $6 level on WAT. Once that breaks, the rest of the grain should run with it. Like I said, wheat's taken a little breather. It's been a nice, lift off the bottom, the recent divergent low. It's up about 22% in just a few weeks here, a couple months, I should say. And so far, it's consolidating under that level. We've hit it multiple times, and I still believe that if and when it's taken out, that'll open the door to those additional targets. And then the other grains, corn, soybeans, will most likely follow. Overall, commodities mostly are green today. We're up, our UNG is ripping, had a perfect pullback entry to support. Crude's up again. So we're firing on all cylinders there, just as I expected. This is that vicious cycle I talked about. The stock market, it's almost at this point in an unwinnable situation because when it rallies, then you're seeing money move, and I'm doing it intentionally too. The charts are constructive, but once the stock market rallies, you're going to see things like crude and ag and commodities rally because it's kind of growth is on, so therefore inflation's back on. The only way inflation's going down, most likely, is really a turn in the economy, which is most likely coming. But with that being said, let's talk about the ag input stocks. So I had let me pull one of them up. Okay, so here we go. If you have TC2000, you can just type in any of the symbols, any ag input stocks, and a nice feature with TC2000 will show you, if you look to the right as I'm sliding over my screen capture software, you have a list of holdings, all the holdings in that sector. And so that's how I'll tend to, drill down, find trade ideas when it's kind of what I call top-down approach. First of all, I'll find a sector, whether it's a bullish or clearly bearish sector, then I'll drill down within there. If it's a bullish sector, I'm going to go through the components and find the most bullish that stand out and not trade the most bearish, again, if the sector is bullish. In this case, this is the first one I'm just starting with. It's at the top of the list as far as market cap. That's how I have it sorted. You have a divergent high, so I'll say not my favorite, but it isn't an uptrend. And one thing to note, too, is that these guys tend to move, ebb and flow along with the agricultural commodities. Makes sense, right? They're obviously, if Farmer Brown's going to plant more crops this year, he's going to order more fertilizer and other things. So that was when all the grains and agricultural commodities here. You can look at it. I'll do it this way for you. That was 2022. They bottomed. 2020 COVID. And so you have DBA is a commodity ETF that I've been highlighting for a while, and you can see almost identical chart. There's 2020, the COVID lows. We had an initial rip up, right? And then commodities corrected, then up again, and recently a lift up here. So let's go back to TVA, and you can see it almost mirrors. So if that's the case, this divergence may very well get taken out. Again, not my favorite. I'm just going through a handful of these. We're not going to look at a lot, just over a dozen stocks, and a little bit more than that. Just want to point out that, here's the thing. It's coming off just like the commodities themselves. They put in divergent highs after that big run, and I view this as a corrective wave. And commodities have been moving up since. So is this one here. I'm not even sure what they do, if it's fertilizer or anything else in that sphere of agricultural inputs. But that's it. And we're coming. We ran full circle just like the commodities. The reason we're long and bullish select commodities is they put in. They've had constructive charts and they've been moving up. So that's it. That was a divergent low. We're at resistance. If I can pop that, then this one has a shot at new highs. Again, not the one I would take. This one I like much better. It's a beautiful chart, in my opinion. NTR, Nutrien Limited. Beautiful, clean downtrend line. Why is it beautiful? Because a lot of clean, distinct reactions with no violations. Breakout, back test, boom, right into this. This is 57.56. Very, very, very nice resistance. Why is that? Because it was support back here. Clearly well-defined support. We had a brief whipsaw down through it, and then it acted once again as support. Support once broken, as it was right there, then becomes resistance, 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 resistance. Boom. That's your breakout point. Pretty much we're testing it right now. So anything much above today's highs, intraday. This is why sometimes you want to wait for a daily close. It's not unusual to pop intraday and then come back in. So pretty much, we already popped it once. I think if they can take out today's highs, which is about 58 and change, that should do the trick. Keep in mind, guys, I just started marking these up today. Some of that I haven't sharpened my pencil on the targets. I'm going to pull this one down for you. Give you a first target there, second target right there. And then some of these are older lines I've had before. I'm not right now looking at that much, but let's just say up here at about 69 if we can get a buy signal there. Like I said, it's already broken out. That'd be about a 20% run. We already had a breakout back test, but we're at resistance now. So you do one of two things. You either, I wouldn't do this, you either short it, you short a rally into resistance, or you wait for a breakout above resistance to buy. The sector looks good. My guess will probably break out. If you want to take a starter, you could do that. Earnings. Okay, we're okay there. Our next earnings, 8.7. CF, this one's in a nice little trading range here. Like everything, remember, that's when the ag commodities peaked there. This one bottom here with a divergent low. It moved up, and it's been in this sideways trading range. So this one, here's a case where you can make a more objective case to go long because you're at support. You're at the bottom of a trading range. It's very, very simple. Watch, rinse, repeat. You buy the bottom of a trading range, you sell the top. You buy the bottom, you sell the top, or close to the top. You buy the bottom, and when you buy the bottom, when you go long, you put a stop somewhat below it, ideally on especially on a solid closing basis. You can target the top of the range, and if they look, if the sector has some momentum at the time, let's just say this pans out, we start to rally up there. I'll give you my thoughts as to whether or not to maybe hold for a position, sit tight and hold for a breakout instead of trying to just game that. What is that? To run up to the top there, about 20% also. So that's the second one I've given you with a 20% target. And if 20% is your number, then you can easily give yourself if you gave yourself keep it tight. Why not? It's well-defined support. You could give yourself even a 5% stop loss would be a 4-to-1 RR, which is excellent. But you don't need to give that much. I'd say maybe 3% max because you'd be well below that range, and that just wouldn't be good. As always, the midpoint, not always, but usually I see around the midpoint of a range, I can put a line that marks support and resistance. So, they'll probably sell it somewhere around there, about 79.50, the first reaction before we get up to the top. And then once we punch through the top of the range, it's more of a zone, if you will, then that should open the door to move up to the top. MOS, Mosaic, nice looking falling wedge pattern. Big, positive divergence has been building. Breakout above the downtrend line should be your buy signal there. You could also take starter positions if you're starting to see, and I'm going to go through this. You need the more and more that start to run. Sometimes I'll do that. I'll get in a sector if I'm looking at a dozen components and 4 or 5 or some of the market leaders are starting to break out. Then I'll look at the ones that are setting up like this that haven't yet broken out but will almost certainly follow suit. And then I get in pre-breakout and it just gives me a more advantageous price. Other than that, you're not at support. I can't make just looking at this chart alone, I can't make a case to buy it right now until at least the trend line goes. But again, just pointing it out for you and, trade it as you want. I'd say up to about there, $43. That would be swing target, about 47%. Certainly a little, I'm going to move this line down here. You get some resistance there, about 33, 32, and then there, 37, 40. So these are your targets right there. FMC. Look like a bottoming play here. This thing's been basing here. You've had divergent, almost an equal low for all intents and purposes. That's an equal low and higher lows on the indicators, i.e. positive divergence. And you've kind of got a little W basing pattern going on here. If it can pop around there, boom, that's about 67.90. We're testing it right now. And it's smooth sailing. I don't see really much. It's a little reaction maybe in the midpoint here you might get. But this one looks smooth all the way up to about 80, almost 87 if it breaks out. And that would be about a 27% rally. Might be a downtrend line coming into play as well if and when this one breaks out. Let me tweak it a little bit here, sharpen my pencil. Oh, I'm coming right on the reactions right there on those reaction highs. All right, so yeah, then the downtrend line comes in about where that target is if this thing can rip. ICL group, divergent low, started to move up. It had probably a little minor downtrend line here I could have added here, I'm sure, and that one broke out already. Broke out of that little wedge, went up, hit the primary downtrend line plus the 200-day moving averages and price resistance. So pretty much if it can pop this trend line, that's a longer term buy signal. 552 reaction high would be your first target, and then I'd target all the way up here. I think this thing could, these guys, then when they want to run, they can really run. So I know these targets might seem aggressive, and but you know, if the sector holds up, they got a shot at it. That'd be about 35%. SMG, Scott's Miracle Grow Group. Most of you are familiar with that brand. You're in Home Depot, Lowe's, fertilizers, and all that for your yard, and all kinds of products. Yeah, if it can burn through this divergence. PPO is constructive. It's below. It's above. It's testing the zero line. See, that's often delineates bull and bear trends. The zero line right there. So bullish when you're above it, bearish when you're below it, and you're above it and you're back testing now. So, and you're at uptrend line support. So you can look at it that way. You can buy it here at the pullback to the trend line and that previous reaction high right there. I'm putting a level line there. So you're at support, yeah. So you buy it at support with a stop below. It's regain the 200-day moving averages. I'd say first stop up here. I don't have the levels. Somewhere about 88, give or take, would be your initial target, swing target. UAN, you know, it's following the sector. Like I showed you, this is where DBA and all the, you know, the agricultural commodities themselves went. And then they corrected. And lately we've seen breakouts and things moving up, you know, such as wheat, and certainly cocoa was going up, soybeans, and I don't know how many of these benefit. Cocoa, I think, is mostly grown in Africa, but you know, the wheat and corn and soybeans, certainly these guys probably benefit. Divergent low, big move up, breakout. It's just consolidating post breakout. So now if it can pop above the recent highs, which is also price resist, it was resistance here, support, support, support. And now that's it. So if it can pop 83.60, it should run up to the next resistance level. Just kind of eyeballing it right now. I'll tell you right there, about 90, and then up to about 104.86 if we continue to get some traction there. BIOX, BIOX, or whatever that is. Downtrend line, breakout of a minor trend line, so I'd target that trend line. It's minor support there. I'm not crazy about this one, but you know, birds of a feather. LVRO, I don't see anything I like there. AVD, uptrend line. You can buy pullbacks too. It keeps running into this about $14 resistance right there with support back here. Then we broke that support. We rallied back, hit it once, and that would be, you know, the next target again. And if we can pop it, then you've probably come in and backfill this gap, maybe head all the way back up. Again, it depends on the sector. I will keep an eye on both these stocks, obviously, as well as the agricultural commodities. Because if I see things I don't like in the agricultural commodity sector, if I have a reason to sell those or especially short those, then I'm not going to want to be long these guys, right? IPI, Intrepid Potash, little divergent low. I guess I highlighted that one back then. That was back in July. Rallied up to that resistance zone, took out the downtrend line, hit the resistance zone right there. And it's just been really bottoming around this level. If we put a line here, it kind of reminds me of wheat. And this was another divergent low. It's really all big one divergent low this whole time. From that point on, we've been building. We made a ever so slightly lower low, just like wheat. And now, boom, we just broke out of this downtrend line right here, the one off these last few reaction highs. Take it over like that. And starting to run. It's up 12% today. Taking on some, let's see, what's the volume? Oh, yeah, nice volume too. Punching out that previous reaction high or close to it now. So that was if I give you a resistance zone back then and it worked, then that's all the better now. I'm just going to widen that resistance zone a bit. So the bottom of the zone is 25.30. The top of it's about 28. If it can clear that, next stop's going to be about 34. I'm sorry, that's $34, $34.90 or whatever. All right, and that would be 45%. And again, I just want to illustrate how, you know, if you're saying, oh man, I'm not going to chase a stock that's up 12%. Like I said, when these guys want to run, they can run. So, 12%, it can do it again next week and do it again the following 3 weeks if it wants to. If the you're seeing momentum come into the sector and constructive charts, so that's why I'm doing the video. Benson Hill, BHIL, put in a divergent low like so many things. I stopped marking up charts. I wanted to get the video out to you. I saw enough. I stopped at IPI. So this is kind of new. I'm just looking at these charts here. Certainly a case to be made. Off that divergent low, if the sector gets some momentum, it'd be nice to see it pop. This is a penny stock. Keep in mind, so also guys, as I go down, that's why I do these in order of market cap. In the beginning, I'm talking about, CTVA was a $40 billion company, NTR 27 billion, 14 billion. Then they get down here. So now we're in a penny stock. It's 29 cents. It only has a $47 million market cap, and they go lower from there. So with that means the risk and return goes up. CGA, I've traded this one many times over the years. Look at this. You could find it on the site. You should be able to, if you type in the symbol or click on the symbol under the post, you'll probably see this setup. I don't know where. I must have probably gave it as a long trade idea on a break of this downtrend line, or I don't know. We had a divergent low and everything back there. Off that bottom, I don't know where we entered it, but my first target, that was a 120% run off the lows, then a 200% run, and I gave you a max target back then of up here. That was created back on April 19th, 2021. So that would have been April, I must have put it right here. It's when I added that max target before it got there. Oh, sorry, we were down here. I'm looking at the crossover. Yeah, we were down here. So we had just hit T2. And then I would have added that max target there. And that, again, I don't remember where we were in on that one, but I've traded this one many times. That's 800 and something percent run. The point I'm trying to make is, like I said, I know the sector. I've traded the sector. I haven't engaged it in a while. Just kind of popped up on my radar today, and that's why I'm sharing with you. And I want to just kind of impress the point that, these things can just rocket on through. These targets might seem aggressive. And I haven't touched this line. I had that line created back in 2020. You can see that. I haven't tweaked it since 2020, 406. That was our target back here in 2020 when I first laid out these targets. And you can see how well it's behaved off it. And look, so that fast forward and kind of, again, dropped off my radar. Look how well that level acted as support when we came back to it years later. Resistance, my former first target, once broken, becomes support on the way down. This thing went full circle, hit my max target, didn't really go much up after that, and had a trend change. And now another trend change. Downtrend line breakout, popped up, hit that old T1 already perfectly right there, 406. Pulled back as expected, back tested the trend line, and it's consolidating over this blue line that I had here all the way back in 2020 as well. I haven't tweaked it. So these levels are still the same levels they were back then. And so now it already popped 303 once, or $3, 309, probably pop it again. And it already checked 406 once, which gives it the permission, if you will, to go on through there the next time around if we do pop over 309 or 310. All right, I'm going to do one new target I can see because that was a long time ago right there. 775, I like that level right there. If this thing can, again, if the sector can get some traction going, that's some nice resistance levels there. And that would be about 182% return. How do you trade a stock like this? You don't need to put a lot. If you're targeting that and you're going to try to make 182%, you're buying it's not a penny stock, but it's a low price, relatively low volume stock. That's why it can run so hard. You can't see Microsoft can't do that. NVIDIA can't do that. A $3 billion company, or $3 trillion, cannot run 500, 600% in a year. There's just too much weight. The gravity holds it down. Only these little stocks can. But guess what? They can also go down in a year 91%, as this one did. And even in short order, they can go down pretty quick. So there's my speech. I say it often, but then every now and then I feel bad when I hear somebody got clocked on natural gas or one of these small, low, high-flying stocks. They let it run. They didn't stop out or let it get too. Risk and reward go hand in hand. Use the position size calculator created on the site. Click on that little calculator icon at the top. I would say about a 0.3, not much more than that, beta adjustment. That means about a third of what you would put in QQQ or SPY. you might want to put into this one. Could even be less. You put a quarter point. What I like to do, I take a shotgun approach when I see a sector I like the pot stocks or whatever, and the ones, the sectors that have a high correlation, and they tend to move together by a shotgun approach. Because number one, to the best of my knowledge, there may be, but I don't know of an ETF that covers specifically these guys, the ag inputs. So what I'll do is kind of build my own little mini ETF by taking, the top half dozen or 10 or dozen or so, whatever the number is, individual stocks that have the most constructive charts, because you never know which will be the big winner. All right, seed. So you're getting down in market cap, but still a $5 stock. And look at this thing already off this divergent low right here recently. This thing's rallied into today's highs. It's pulled back a little, 332%. Okay, so I think I've impressed upon you the fact how much they can run. It's got some divergence here. Need to take that out to really go much further. And it can. It's coming off a big divergent low. But we're at resistance now. This was a line here, 487. I had that line also when we were last engaged in the sector back in 2020. That was a line I laid there, and it would have been, off this divergent low. So I would have been targeting that back then. You can see this one at that time ran, before all said and done, it had a 940% rally off this divergent low right there, and then ended with that big divergent high and gave us this. And so, if this one can run, it'd probably come back up. I'm going to tweak this. Well, I'll leave it there just for whatever, because it acted as a line. It was a level I had in the past. This is the new one right there. I'll call it max target right now. 1210. So what would that give us if 1210 is hit from where we're at today? Going to be a 131% rally if hit. All right, guys, should stop here. There's a couple of the Y10, YTEN, or Yield 10 Biosciences, big divergence there as well. This one split. That's why my lines got wonky. So even the price levels don't matter. All that matters there, you do have divergence. Had a reverse split, I guess, there. And ITO, some of these are, this one's headed down to penny stock fill. But you know what? The lower ones tend to rip more if the sector can get some traction. So there's one for you as well. But just remember, I'm getting down into, now that was a 1 to 100 reverse split just so they could get their share price back above $1. So this would have been a penny stock. It's been in a death spiral. And that's it. Those are all the ones I have. Oh, there's the sector. That's the sector itself right there. Ag Inputs IX 1010 on TC 2000. There's a case. Obviously, you want to make a case to be long the sector itself, and then do what I just did. Drill down, look at the individual components, and see which ones look good. And like I said, majority of them do. So that's it. And if I can pop this line, boom, then that's a breakout. And the sector itself should head up to about right here before any major. And there's going to be a little stop along the way, of course, right there. But boom, boom, boom. So the sector could easily rally, 12%. And that would put a lot of those earlier. I gave you, some of them early on had like 20% near-term targets. That would make sense because not each and every one, remember I'm highlighting the ones I like the best. And so those have that 20+% gain potential. And, maybe more. We'll see. If the stock market, shits the bed, it may give a headwind to these guys. They tend to be, they're very uncorrelated to the S&P 500. But again, if it's a big, big hammer down in the market as these guys get going, I may, call some of them early, meaning book profits early. Because, again, you have to be in that kind of liquidation, that impulsive type selling in the stock market, which I still think at some point in the very not so far future we're going to get, but we're not there right now. So it's, in my opinion, it's okay to engage this sector. All right, let me stop here, get the video out to you, and I'll do what I do, which is continue to hunt for new trade ideas and share any that I see. But as of now, these are the ones that stand out today. This has been Randy Finney with Right Side of the Chart. Have a great day.